You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning, traders. This is your Options News Rundown for Friday, October 12th. First up, Reuters is reporting that Wall Street has climbed more than 1% so far this morning following its worst two-day slide in 8 months, with technology and other high-growth stocks leading the fight back. 10 of the 11 major S&P sectors were higher, led by technology sectors' 3.11% jump, with Microsoft and Apple both gaining 3%. JP Morgan Chase and Wells Fargo reversed earlier gains to tread lower after their quarterly results, while Citigroup was up 1% as its profits topped estimates. The bank results launch a quarterly reporting season that will give the clearest picture yet of the impact profits from President Donald Trump's trade war with China. Next, we're picking up a story that began yesterday with CNBC. Stock market's rebound this morning is the beginning of a, quote, real rally, and the only thing that could hurt it is the Federal Reserve, according to CNBC's Jim Cramer. Cramer, who has been critical of Fed leadership under Jerome Powell in recent days, contended this morning that the central bank should hike interest rates one more time this year and then, quote, wait and see. I want to Yellenize, Cramer said on Squawk on the Street. I think the current Fed is vastly out of touch. Cramer was referring to former Fed Chair Janet Yellen, Powell's predecessor. During her tenure, Yellen was cautious about raising rates while stressing that any future moves would depend on what the economic data showed. Janet Yellen would say, let's just do one and see, Cramer said. I miss Janet Yellen. Stock futures were sharply higher this morning, with the Dow Jones Industrial Average opening more than 300 points higher. Later during the session, the Dow was up more than 400 points in early trading. This week's decline in stocks, the worst since late March, was fueled by concern that the Powell Fed might raise rates more than forecast. The central bank has already hiked rates 3 times this year, with one more expected in December. On Monday, Cramer said that the Fed's shift from being data-dependent to being blinded by the desire to normalize rates could spell trouble for stocks. Cramer turned out to be right, with the heaviest selling of the week on Wednesday and Thursday, knocking the Dow down by nearly 1,400 points, or more than 5.2% in 2 sessions. Finally, Bloomberg is reporting that gold may have finally snapped out of its inertia. Prices largely held the biggest gain since June 2016, when the UK voted to exit the European Union, after a slump in global equity markets stoked demand for the metal as a store of value. Bullion received another shot in the arm during Thursday's surge, after data showed weaker than expected U.S. inflation raised speculation that the Federal Reserve may slow the pace of interest rates. Gold, which hit a 10-week high of $1,226.42 an ounce yesterday, held near $1,200 since late August as traders weighed geopolitical risks that could boost the metal's allure as a haven against rising interest rates that curb its appeal. On Friday, prices dropped, but gold still was poised for the second weekly advance. Most Asian and European stocks recovered after the biggest sell-off in global equities since February, and U.S. stock futures extended gains and treasury yields ticked higher. That's all we have for today. You can find all of these stories and more on theoptionsinsider.com. Dan Passarelli will thankfully be back on Monday, and he'll have more options news you can use.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.